Καλησπέρα και από μένα στη Broad Expo North. Η επόμενη ενότητα θα είναι αφιερωμένη στην καινοτομία. Η Θεσσαλονίκη είναι μια πόλη που εξελίσσεται σε κέντρο έρευνας και καινοτομίας. Με αυτή την ευκαιρία θα θέλαμε να παρουσιάσουμε και την τελευταία έρευνα του ULI σε αυτή την ενότητα, η οποία και αυτή ήταν αφιερωμένη στον τομέα της καινοτομίας. Η τελευταία έρευνα του ULI, το Emerging Trends in Europe, που περισσότεροι γνωρίζετε από παρουσιάσεις που έχουμε κάνει, έδειξε ότι ο τομέας των life sciences είναι πολύ ψηλά στις προτιμήσεις των επενδυτών. Γι' αυτό και η καινούρια έρευνα του ULI αφιερώθηκε στην κατανόηση του τομέα και στο πώς αυτός μπορεί να αποτελέσει επενδυτικό προϊόν στο μέλλον. Η Savills ήταν ένας από τους sponsors αυτής της έρευνας και γι' αυτό σήμερα έχουμε προσκαλέσει τον Steven Lang από τη Savills UK για να μας παρουσιάσει τα αποτελέσματα αυτά. Steve is Director of Research with Savills, and he is a special advisor on life sciences. He worked very closely with ULI on the production of this research paper, and that's why he is one of the best people to present the findings to us, and then to discuss a bit more about them. Steve, the floor is yours.
Thank you, Eri, and hello to everyone. So yes, so the next 10 sort of 15 minutes, I'll be reviewing the report from ULI that was published in February. So it was published in February this year, and really encourage people to dive in and have a look at it. But for today, I'm just going to give a few sort of snapshots and overview of what the report was showing. It was written by Adobe, and there were 7 sponsors and members of the steering committee, as shown on the slide here. So really jumping into life sciences investment and the rise in Europe, certainly over the past 12, 24 months. I mean, a lot of this was, of course, driven by COVID-19, but there's been higher levels generally over the last couple of years of what we've been seeing from a real estate perspective. In terms of that investment, it has two meanings, both the investment environment for the companies themselves in terms of raising capital or IPOs occurring or M&A activity, and I'll come on to that in a moment. But also there's been an increasingly level of real estate investments across the European markets. It's still relatively low compared to other sectors. So it firmly sits in that alternative real estate bucket. But we would estimate over the next few years, we could see around 3 billion euros of investment volume transactions, which would probably make it around 3/4 of what we've seen in the US markets today. Generally, also in terms of investment, you look at the types of developers that are building this space. And it's probably not that long ago that when you talk to developer investors in the US, that they say there was probably about 5 or 6 competitors in the market. Now, for some of the US developer investors, there's probably about 20 plus in those markets. So the level of interest in investment terms have increased significantly. So what's the fundamentals of life sciences? Well, they're pretty compelling, both looking at the demand side and the supply side. Won't run into any of these in a huge amount of detail, but broadly, aging global population, growing middle classes, and more money to spend on healthcare generally. On the supply side, we've got big pharma, facing a patent cliff. And what do I mean by that? It's where drugs potentially used to be big blockbusters, but broadly they're coming off patent, so they need to then work out what they need to do next. So where we used to have these blockbusters, they're now very much pushing down the sort of much more personalized types of drug discovery. So that has a big impact on real estate generally. There's big weights of venture capital money. And again, I'll come on to this in a moment, but that's very important because what we see, it's like a lead indicator of where real estate demand is going to come from. But also, we're also seeing a speed and success of scientific discovery. And this has a co-location where the big pharma wants to sit alongside the smaller organizations. Now, just picking up on that personalization of medicine, and again, a key growth and the factor that's driving more demand for company growth, but also for real estate. So broadly, the way that big pharma used to operate used to be a broad diagnosis, and you effectively create some form of product, a pharmaceutical product, a medicine that broadly affect the majority of people. But as we've gone on to this individual characterization, we've seen the rise of genomics and other data sources, etc. You're creating a type of therapy, a type of drug that has a much wider implication. So what we're seeing as a business, particularly within our own company in Savills, we're speaking to lots of companies that are growing in this type of space, and this has a big demand, and an increase in demand for real estate going forward. Now, we can also look at probably what you could term the traditional names of pharmaceuticals and biotechnologies. And these companies are also requiring huge amounts of real estate and sit on large portfolios of real estate as well. They're still big spenders. And when you look at the top 2,500 companies globally, and here we're showing the top 30, 10 of those companies are what I would sort of term that traditional pharmaceutical biotechnology company. Now, in terms of the overall share of spend on an R&D basis, annually, the pharmaceutical and biotechnology sector account for 20% of overall investment in R&D per annum. This is higher in comparison to the 16% share for both the automobile and the technology sector. So it shows you that these organizations are big spenders and it has a big demand on real estate going forward. But also, let's not forget the technology companies, and I'll come on to those in a moment in terms of how the nature of life sciences and discovery is moving forward. Now, focusing back to Europe and looking at that venture capital, which I said was increasingly important. Now, it looks relatively good for Europe based on what level of venture capital activity we saw in 2020. Now, this is usually that earlier money into companies and their growth, although, of course, there can be some later stage venture capital. So we've seen lots of companies that have raised in that venture capital arena, and then ultimately over 12, 18, 24 months later, acquiring quite a large amount of real estate to then create their business plan and to actually start to discover real estate. So what we've seen in 2020 across Europe, a near on 46% increase in the overall level of venture capital to look over 6 billion in total. So this capital will have a short-term impact on real estate demand. Now, I've talked about the technology companies when I was mentioning the R&D spend globally, and life sciences as a definition is changing. It's very broad. We talk about wet laboratories, and these are your chemistry laboratories or your biology laboratories, but increasingly the notion of dry laboratories, computational laboratories, data-led. And some of the big organizations, the big R&D spenders, the big technology companies have increasingly moved into the life science space. It's no real surprise to see companies like Apple that put their #1 priority around personal and human health going forward. Data machine learning in terms of that computational and that data need, computational labs where Google, DeepMind and Microsoft are investing relatively heavily. So broadly overall, in terms of discovery, life science is changing between all types of organizations. So taking it back to the report and what do we talk about, we come on to some of the key drivers and what is it that makes a good life science location, whether that's at a local or a national level. Now, everything comes down to ecosystems, and it's absolutely critical in terms of the element of success of life science locations across the globe is making sure you have the right ecosystem in place. And that goes from the government, the academia, but also that venture capital and urban environments. But it's really important to sort of focus on those national policies, but it's also important to look at much more local factors and the local ecosystem for success. So towards the bottom of this chart, we talk about a triple, quadruple. In fact, there's now a quintuple helix. And what do we mean by this? So 20 plus years ago, there was a model put forward to understand how life science, how discovery works, how R&D works in this sector. So like I said, it's been around for over 20 years. And it's really that interaction of where industry meets academia, meets government. I've also mentioned about the quadruple and the quintuple helix, so additions that we've seen to this model. And no real surprise, with an ESG, environment, social, governance sort of wrapper around the triple helix, this has become increasingly important in terms of meeting social good and environmental good and governance good. But what's really critical for the real estate industry, that real estate must sit in the middle of these in terms of delivering real estate that brings all of those together for the greater good and for greater discovery. But we could also look at the life science in terms of its real estate, in terms of how real estate fits into that. So you can see in the middle of this diagram here, taken from the ULI report, is that government, is that academic institute inputs. And broadly, you can see how life cycle of the company grows through times. As they create their ideas, they start to gain some form of capital investment, they go through a startup, and eventually you go all the way through and hopefully to some form of exit. So we've seen this growing throughout the globe, lots of locations that seeing this sort of evolve over time. And it's really important to understand the types of real estate involved in this, because it's not just about the laboratories and the big global headquarters. It's about the smaller accelerators, the incubators, the innovation space, and making sure you've got a whole type of real estate space available for those ecosystems to evolve. So just to give it a broad understanding, I just want to look at the University of Oxford. Now, look, we're looking at the second oldest university in the world here in terms of not being established over 900 years ago. So it's not really to sort of read the detail on this chart, but really it's to sort of just look at the general shape of the chart over the last sort of 6-7 years. Now, it comes down to, in terms of that academic input, is in terms of making sure you're commercializing your ideas. If you look to the US markets, they've been doing it for years and they're very good at it. So we look at organizations in Oxford in particular, is Oxford Sciences Innovation. Now, they were established in 2015, and the idea being to commercialize ideas, IP coming out from universities. And really the key point from this chart is that mushrooming effect of organizations that have grown, where the academic ideas have been turned into real life companies, and they have grown. They have then required real estate space within the local markets. And some of these spun out companies from the universities have also seen exits, and they've been bought out. So it shows you that growth of the economy, growth of university income, but ultimately real estate demand. That's the result from all of this. And it's really important to drive that local ecosystem. So overall, where do we see the best locations? So Savills this year, published last month, we looked at a global report called Science Cities, and we looked at these sort of 6 factors to understand what makes a good location. So we benchmarked 20 global locations, and here those are the factors that we talked about. So in terms of the overall score, it's really important to look at where there's good practice. What does good look like? Where is the key locations across the globe? If you're looking to create something in your own markets, of course, it's really important to go and see where it's worked considerably well elsewhere. No real surprise from this chart that you can see that the US markets dominate. They're obviously very, very strong and has a very, very strong R&D environment. But it does give an indication of where you need to learn in terms of creating that triple helix, quintuple helix, and making sure you create the right type of environment for your own markets going forward. So going back to the ULI report, all about investment activity in terms of life science, real estate. You know, where are the top locations in terms of the destinations where buyers have been active and buying sort of the physical real estate in the market? It probably comes no real surprise to look at these top 5 markets, which count for roughly about 3/4 of the overall investment levels that we've seen since 2015. And it's in those markets where life sciences tends to be more mature in terms of, and also having the bigger organizations and also the leading research institutes and the university and academic institutes as well. So the big question mark is how we're going to grow this, and we'll come on to that in a moment in the Q&A. Moving on from the investment side, again, going back to the report, but looking at the occupier need. And this is a diagram that was taken from a ULI report back in 2015. And not much has really changed if we replace what occupiers want in the innovation economy to what they want in the life science economy. But one real key factor from speaking to large global pharmaceutical companies, the big add-on to this is really, and what's come to the fore in terms of the discussion, is about the access to talent. It's absolutely critical. It's a much higher consideration, not only in a post-COVID-19 world in terms of how do we retain the best talent to create discovery and work in this sector, but in terms of where do we need to be in terms of attracting the future talent and growth in this sector, particularly where it's moving away from chemistry and biology, but also then moving into the technology field. So a very different type of labour required going forward. So it's interesting to see how markets can evolve on that basis. So really sort of brings me on to sort of the last slide and the summary from the ULI Life Sciences report, and sort of almost like recommendations on where we need to get to and what we need to do next. So it's really fascinating to have an understanding of the key factors for this sector in terms of how it will grow going forward. I mean, let's just pick up on the weaknesses first in terms of the sector overall. You know, generally, it's about data. Our sector is about data, making sure we've got the right type of information to make decisions, particularly when it goes to investment committees. Generally, the report sort of talks about the lack of product for occupiers, but this is changing. Lack of investment stock, you know, just that, how do we tap into, how do we monetize, how do we find the types of assets that we want to buy? Because for us as an organization, looking at Savills in particular, you know, we've done dozens and dozens and dozens of presentations over the past 12 months, speaking to global investment companies and funds that want to get into this sector. And at the moment, the investment stock becomes the slight issue, but we are investigating how we tap into it more. And I think broadly for some of those investors, it's really a lack of understanding or trying to work out an education for themselves in terms of how it works and how the life science sector works, because just diving into that ecosystem, diving into that triple helix requires a good degree of advice and assistance and help from other organizations that have worked in it. So operational expertise is clearly a really important factor. But as I said right at the very beginning, in terms of those push factors, in terms of the opportunity, the supply and demand, of course, COVID-19, but it's not just about COVID-19. There's a large number of cures and therapies and vaccines that's required. There's much more money and interest generally from real estate that wants to get into this sector. But also it starts right at the very top in terms of the government. You know, policy priorities in terms of making life science, discovery, medicine, therapy, vaccination, you know, absolute top priority for their populations. And this is what's going to be a key driver for the sector going forward. And then just to finalize and finish on, really, it is that impact of technology around data, artificial intelligence, machine learning. We're going to see this having a much, much bigger impact on the life science sector going forward and in the future. And of course, more information on this can be found when you look at the report. So would really encourage you to have a read the report. It's a great report, and I thank you.
Thank you, Steve. A fascinating topic. You mentioned how much education most of us need, and thank you to ULI that took the initiative to do this research paper this year with the support of all the sponsors. I'll pick up from your last slide. I think that, you know, all these activities probably going to create a lot of competition among cities across the world, and you discussed the importance of the triple helix model for the success of a life science location. I mean, when a city or a location is at an early stage of its development, like Thessaloniki, for example, which factor of this helix do you think is the most important to accelerate this growth?
Yeah, so it's a really, really good question. And, you know, from looking at this sector for 20 years, what you tend to find when you're starting from a standing start, if you like, or, you know, there's something bubbling under the surface, but you just need to draw it out, that the key aspect is around government, and in terms of government investment, government spending to create that facility. For me, it's all about the honeypot. It's about creating a facility, a research institute where you can put that on site or somewhere in the locality, and organizations need to or want to be located around that, because it's either a center of discovery in terms of it's where they can raise capital, or it's government that's going to invest in those organizations. And gradually over time, you will build up that ecosystem because it will attract more and more organizations. So just as an example, just to the north of London, there's a small town called Stevenage, and the government invested in a sort of a catapult, in a sense of it's a program around cell and gene therapy, and it was also relatively close to a large global pharmaceutical organization, which did help as well. But what sprung out from that is lots of smaller companies that were looking into that sector, and they wanted to be close to the money. They wanted to be where that funding was going to come from. And as a result, we've seen lots of organizations spin out and grow out from that. And that was all driven by the government in a location that potentially wasn't sort of established like Oxford and Cambridge and London. So government is probably a shorter answer.
Okay. I mean, definitely we saw in the ranking of the science cities that all of them are the base of some of the most prestigious universities globally. So let's assume government does its best. But how can a city with a secondary kind of universities, smaller, lower ranking universities, how can they compete to attract talent, companies and investment? Do you have any interesting examples that stand out?
Yeah, I mean, apologies, I'm going to talk about the UK again, but just what we've seen in terms of, let's call them probably more secondary universities, so not the big names that would be recognised across the globe. And it's, as I talked about that bubbling under in terms of that specialism, and there's lots of universities that says, okay, well, we're not going to compete on this particular level of science or this particular technology or discovery. We're going to do something a bit different and be unique in terms of what we do. And we've seen lots of examples across the UK, and there's a very strong sort of pull in the UK in terms of levelling up. So making sure it's not all about the key core locations. So university specialism, working in a particular area, particular arena that's going to grow, that then attracts interest in terms of students, undergraduates, postgraduates that then specialise in that particular field. And then if you've got that, then effectively you've got the pool of talent. Because as I talked about in the presentation, towards the end of the presentation, it's about that pool of talent and the access to that best pool of talent. So it's not always trying to just go for the big main sectors. Perhaps niches work particularly well. And we've seen loads of universities across the UK that have done that specialisation, and it works incredibly well.
Thank you. And let's talk a bit more about real estate, since we mostly have real estate professionals attending this conference, and you mentioned that real estate sits in the middle of this helical. What do you observed as a kind of the usual ownership structure or real estate development process in life science hubs? I mean, is it like the chicken and egg? Is it the real estate a prerequisite, or is it the result of the growth?
Yeah, I mean, it is relatively tough for, say, traditional investors to say, okay, well, we think that we'll build it and they will come. I mean, that does work in some markets, but they have to be massively successful already. So you look at the Boston, the Cambridge, Massachusetts markets in the US today, absolutely, you can just build it anywhere within a 20-mile radius of that market, and it works really well. I think, you know, for the real estate investors and the traditional developers, investors to come into the market, they want to make sure that that ecosystem has developed. There is some form of government investment in there to almost underwrite their investment in the future. So we've seen lots of locations, again, in the UK where the more traditional investor developer have come in once that ecosystem has been established. But overall, across the globe, there's a real mix. So sometimes it's government and then real estate investors work hand in hand. Sometimes there's a lag, and that lag could be 5, 10, 15 years. Because you look at some of the markets, it takes a long time to establish these ecosystems. It's not just you can build it in 5 years and it will be massively successful. It takes a huge amount of time. You look at MIT, Kendall Square, the go-to example across the globe of how you do this. That's 60, 70, possibly 80 years of development to create that. You look at how you can do it in a relatively shorter time period. You look at Biopolis in Singapore, that's been a 20-year play, but that was heavily government funded. So even to start to grow something where what looks like one of the best or trying to look like a global leading location, it's going to take you a couple of decades. So of course, in terms of that ownership, funds, traditional funds, investor developers, they're going to come in at a much later stage once that ecosystem is up and running and growing a lot stronger. Yeah.
Again, I mean, the next question is a little bit the result of what we observed as investor appetite from the PwC ULI Emerging Trends report, where life sciences came very high as a preference. You did mention, the supply of product is probably cannot meet the underlying demand, but what's your what do you think about the future? Do you think it will become an established segment in the market, and what maybe can trigger that further, can help this happen? Who owns these existing maybe also properties that can make it available to the market?
Yeah, I think that sort of comes from that final slide where in terms of that lack of transparency, data, etc. It is tough, and we've been looking at it for a long time in terms of how you unlock potential opportunity. Now, a lot of it obviously comes down in terms of old ownership and who built this space. So we look at some of the markets, of course, through France, Germany, the Netherlands, and there's a lot of public-private ownership to those. And how do we unlock that? Because frankly, as I've sort of mentioned, those dozens and dozens of presentations we've done over the past 12 months or past 24 months, there's a huge amount of capital that is chasing opportunity to invest in the life science and human health sectors overall. So I think it can be sort of much more sort of away from the alternative bucket and into the more traditional bucket. But it sort of feels like it's going to sit in that sort of data center space, that in terms of slightly alternative, but not a crazy idea. But in terms of the overall volume and what's out there, we're still discovering. And you speak to lots of investors and developers, what they see in terms of how they're going to get their returns and also get into this market is very much in terms from a land and building and development opportunities rather than buying built stock. Of course, they will buy built stock, whether it's a global R&D pharmaceutical organization, but ultimately they are looking at sort of much more of a development play is a general sort of response that we get from speaking to these organizations. And I suppose it's just sort of looking at why it sort of has moved up the rankings. I think everyone says, well, it was just COVID-19 and people just thought it's the sector I now want to be in. The reasons why, because utilization rates, people still went to the R&D labs, etc. So even through a lockdown period, there's a huge amount of utilization and people working in those buildings. So much more surety. The tenants feel slightly stickier. So what do I mean by that? In terms of level of fit out they put into their buildings means that they're more likely to take longer lease terms. So you can see overall that attractiveness is building up. But hopefully, as there's much more interest and more players, more investors wanting to get into this sector, we will start to unlock both development opportunities and standing stock opportunities across Europe.
Thank you, Steve. I mean, definitely a sector to watch closely. A bit more, I suppose, education is required from us researchers, more data collection, analysis, and and helping the players in the market to see the opportunities. I think we need to wrap up here, although the topic is very broad. I hope our audience found interesting. I hope they learned something from it. And yes, as you said, please go to the report, and it's a great introduction to this segment. Thank you, Steve, and thank you, Prodexpo.